The crypto market is really starting to pick up a lot of pace again. I always like to check in on the charts to see the total market value of the whole crypto market, just to see what the overall trend is. Let me check how we are doing at the moment relative to how we were doing back in April and May when everything was just going a bit crazy. So from looking at the chart straight away, we can see that we are definitely back on an uptrend in the last month. So we saw the heights of the whole crypto market back in the middle of May. So we had a market cap for the whole market was up as high as 2.5 trillion in the middle of May. So the height there was at the 12th of May. And as we know, the whole market tanked pretty fast after that and fell about 50%. So we hit a low there towards the middle of July of 1.2 trillion. But then things really started to kick off at a huge pace again there. And just in the space of a month, we have come from about 1.2 trillion back up to having a market cap of close to 2.2 trillion again at the moment. Now let's check in and see how many of the top cryptos are touching or coming close to their all-time highs. So as we can see at the moment from the charts here, that the likes of ADA, Solana and Hex are all after setting all-time highs in the recent week or come very close to hitting it. And it's likely that we will see Bitcoin, ETH and other projects also breaking their all-time highs if things continue the way they are at the moment. This takes me on to the topic of today's video. Whenever I see any project set a new all-time high, I often see people who are invested in it talking about the following strategy. When a project sets a new all-time high, it often sees a bit of a pullback in the days or weeks following setting that new price. This tends to be because when the price goes into uncharted territory, there is very little support for that actual price in the market. A lot of investors then think about trying to profit from this pullback. What they will do is try and sell their holding when it reaches the new all-time high, and then hope to buy back the exact same amount of tokens but at a lower price in the future, and essentially profiting from the fall in the price. And there is nothing wrong with this strategy whatsoever. But there is one factor I think that investors rarely take into account when they actually use this strategy, and that is the effect of the tax. I'm going to go through a practical example here just so you can understand exactly what I'm talking about. So for my example here, I'm just going to go for somebody who invested in ADA. So I'm going to say they bought 3,000 tokens of ADA and they had an average cost of 80 cents that they paid for the tokens. So this cost them $2,400 to buy the 3,000 tokens of ADA. Since they bought the tokens of ADA, the market price of ADA has shot up to $2.5. So they're pretty happy. Now the total market value of what they own, the 3,000 ADA, is now worth $7,500. So they're pretty happy with that, and they're thinking this is a new all-time high. Now I want to sell this, it's going to fall, I'm going to buy it back at a cheaper price. So what they do is they have made a profit here by selling it at $2.50 of $5,100. And if you take into account what the tax on that amount is, 33%, so the rate I'm using here at the moment is the Irish CGT rate. So you can insert your own tax rate from whatever country that you're in. We're unlucky in Ireland, our tax rate on our capital gains is pretty high. So 33% of our gains there is $1,683 that they have to pay over in tax by selling their whole holding in ADA. So that means they had a net profit after tax of $3,417. So their available cash then is, they don't obviously have to pay any tax on the amount that they paid as the cost. So that was the $2,400 that I said here at the start. So you can add back that $2,400 to the net profit that they made, and that is the total cash that they actually available. That's the total amount of cash that they received for selling their 3,000 tokens. So they have 5,800 available now to reinvest whenever the price drops. So the price of ADA then falls to $2, all the way down from $2.50. So they decide that this is a good time to try and buy back in. So they get that $5,817 that they had, and they go to try and buy as many tokens as they can again. But as you can see here, the amount of tokens that they could get for the $5,817 is just 2,909 tokens. So they ended up with actually less than what they started with. So just in summary for that, even though the price has dropped 50 cents, when you sell at $2.50 and rebuy at $2, you're actually worse off due to the tax. You end up with 92 less ADA. So always take the tax into your calculation, before you ever sell at the all-time high. Just out of interest, the price would have needed to have fallen to $1.94 before they would even have broken even due to the tax. So it would have had to fallen by 22%. If anybody was considering to use this type of strategy, what I would recommend to do is to use this type of calculation but work backwards. So decide on what you think the price is going to fall to, and then work back and see what kind of profit that you can make, including the tax. And that way you can try and make sense of if the profits that you can potentially make by using the strategy are actually worth the risk at all. So that's pretty much it for today's video. Another short one, but I hope you guys enjoyed it. If there's any new viewers out there, make sure to drop the like button on the video and make sure to subscribe to try and keep up to date with my latest videos.